Sorry about that. Had the wrong headset on. This is Tom Alexander. This is the weekend update for Saturday. Actually, this is the weekend update for Monday, September 29th. Today is Saturday, September 27th. And as far as the U.S. stock market is concerned, it's business as usual, dip and rip. Now, I'm of the opinion that what we saw last week, the little dip that we saw, is just as likely to be the beginning of a more complex correction than it is just the usual dip and rip. Remains to be seen. Uh, as I put in the written report, I am wrong about that. If all of the indices, the primary indices, the NDX, the SPX, the Russell, the New York Composite, the equal weight S&P, if all of them now close above last week's highs, something else is going on. It would not surprise me to see one or more of the indices trade to a new all-time high in this corrective process. But if it is a corrective process, all of them should not. The decline last week was pretty benign, or it was, and I'm looking for more of a correction time-wise and in depth. And I have been outlining the reasons for that. There are auction market reasons for that. It's not just Tom's wild ass guess. Uh, let's take a look at the charts. Okay, we're going to start with the just a bar chart of the S&P. This is the monthly chart, and I'm showing this. There's nothing magical on here. It's just it's for perspective. We're up almost 39% off the April low in 5 months. Now, the rally off the COVID low carried 121%. So this is certainly not close to that. But from a time perspective and velocity, it's exceeding this. And not only that, but this took 22 weeks. It took 22 months. This has taken 5 months. You also had 6% plus retracements that spent a month or two in this rally into this high in 2021. We've barely had a hiccup on a 2-day basis in this rally off the April low. Now, could this continue? It could continue, but if it does, it's unprecedented, and that includes all the market history that I personally have lived through in the past 40 years. That includes 1995. It includes the 98 period. None of those periods, I don't believe any of those periods had 5 months of the velocity that we've seen since this April low, with as few and as shallow retracements as we've seen in the SPX. So the probabilities are, even if we're going to go trade higher into the year, that this current vertical move begins to take a more two-sided stair-step approach, if indeed it's going to trade higher into the end of the year. We have not had we really haven't even come close to having a lower monthly close since the April low. Okay, so that's that. Let's look at some of the other indices. It's pretty much business as usual, guys. I mean, let's go over here. I'm going to go to a daily chart in the SPX, and the levels are pretty clear. It's Thursday's low, and then you have Wednesday's high, and then above there, the all-time high in the SPX. Now, instead of me going through this and doing this exercise for all the indices, I put these charts on the website. It's free. Go to alexandertrading.com, weekend updates, click on weekend updates, click on the date. You can see the charts there. You can download a PDF. You can also access, going back at least a couple of years, all the weekly updates that I've done, and you can see the thought process behind the analysis that I use, which is based entirely on auction market principles. Yes, I do use market profile, but market profile is just the graphical representation of the auction process. So I'm not going to, there's no point wasting your time and my time in this video going through each of the indices. I've outlined, just like I have here for the primary indices, the important levels. And it's basically Friday's low, Wednesday's high, then the all-time high, etc. Now let's look at internals real quickly. VIX dropped dramatically. That's not a big surprise. What was a surprise was how persistent it held up into this short-term top. And then one last thing we'll take a look at. Let's take a look at the internals. Breadth, NYSE breadth. This is the red line for those of you that first time listening to this. The red is a moving average, 10-day moving average of NYSE advancing issues. Green is a 5-period moving average of NYSE advancing issues, and the histogram is breadth. So that's where we are. Again, the thing that I feel most confident in is that even if we're going higher, we're not going to go higher at the same rate of change that we've gone up since that April low. You guys have, do me a huge favor. Please please subscribe if you have not. It helps with the algorithm and all these things. You guys have a wonderful rest of your weekend. I'll speak with you again very soon.